Sending Thursday, January 16, 2025. Talk really quick about the market, some names I'm looking at. Go from there, take a look at the S&P futures. Kind of mixed this morning. We were at highs about 3 in the morning. You had TSM earnings come out, just a monster beat. And then all those, the entire semi space rallied up this morning. And then we had kind of a meltdown. And then at 8:30, we had retail sales numbers come out. Disappointing, right? Missed estimates. And then you had the weekly jobless claims come in higher than expected. So now we have, oh my gosh, weaker economic data. Now instead of the hot economy, people start saying, oh no, we're in a recession, right? They'll just change the narrative as the data points to something different each day. But for now, I think you actually want to see a little bit of weaker data because I think that'll help hold the gains. And then also you want to see that the US dollar, which despite the rally yesterday, US dollar continued to head higher. I put on the watch list. If yields and the dollar keep heading up, it's not going to matter the data anymore. It's just these momentum names and the market's it's just going to come down. It's just how it works. Hopefully that doesn't happen. Yesterday I was a little concerned we'd have the similar reversal we had after the PPI data. Thankfully that didn't happen. And then the oddity, I wouldn't even call it the oddity, but the 12 o'clock seems like, I don't want to call it witching hour, but the 12 o'clock hour for the last 5 sessions, there's been nice bounces. So another spot to be watching today, especially if there's any kind of pullback. Want to see that 12 o'clock handle kind of hold, right? So 50-day moving average 592 and change. Actually 58. That's the 592 and change. So want to see that hold, and then that 600 handle is going to be resistance on the way up. So outside of the weekly jobless claims and the retail sales today, next week we have earnings, right? So Netflix kicks it off Tuesday with the tech earnings. That'll be a big one. Markets close Monday. Not much else. I mean, Johnson & Johnson, 3M reports. I think Intuitive Surgical's on Thursday, but they already pre-announced. The only thing you'll get from ISRG is more color into their guidance and their procedural growth, right? So those will be some things at the next week. So it's kind of like a little quiet space here. So how's the market going to react to that, right? So hopefully we can find some footing here and then work our way to 600 next week. And over that 50-day moving average today is kind of what I'd be hoping for. Just to hold 592 and change, and then kind of get all that angst out of the way, and then markets can head back to what they were doing towards the end of December. There's yields tumbling its most in a couple months yesterday, and then the strong US dollar, which again, surprising. All right, so then on a footnote, and I'm not going to go on a rant because I don't have too much time, but Hindenburg announced they're disbanding their operation yesterday. I am not a fan of these short activist folks, not many of them, because a lot of folks, they throw out 800 short and distort pieces and fear, uncertainty, doubt pieces, and maybe 2 of those 800 play out, and then they pat themselves on the back that they exposed all these people. Well, meanwhile, a lot of folks, especially when you're in calls, like a lot of times I am, maybe it impacts a stock that shouldn't have been impacted, right? But I guess that's the free markets, right? You need to have both sides of the story. When you have analysts who are bullish names, you want to have color to not only the great things about companies, but maybe some of the things you might have missed. So I get it. But some of the reports they've wrote, so I've said this many times. I was negative Nikola back in the SPAC days when it was going on this run. I started looking. I said, "Wow, there's something not right with this." And then you start doing research, and then you look at it, the CEO, and I mean, this is all out there now. But I could show you. I used to post on Reddit a lot. The founder, his chief technology officer, was fixing pinballs 2 months before he was hired on Nikola to be their chief technology officer. Their chief information officer made the website for Trevor Milton's previous company, UPillar, which was like he said was Amazon, right? It's the first to have shopping carts, just crazy stuff. But meanwhile, that led me to Hindenburg. So not lead me to. I had all this stuff negative. Then he came out with a short report like months after I was already negative, saying, came out with that report. But he had a whistleblower. So the Twitter handle guy's name was Nikola Insider. That was the Twitter handle. He had all the information, and then he searched out someone, and he found Hindenburg Research, gave him all the information, and I'm sure they all made out great on this whistleblower stuff. They probably made millions of dollars. So that was kind of his claim to fame. And he actually, I followed him, but he actually used to DM me a lot. Here's one of my DMs. So like one of my pats on the back. So Jeff Ubben was the guy who was involved in financing Nikola, and he went on CNBC, and ValueAct said Nikola's $100 stock, and even more, $100 billion company and all this stuff. And I'm like, how does this guy who's worked so close with the company does not realize that it's all smoke and mirrors, right? I mean, it still exists now, and maybe we'll be proven wrong in regards to hydrogen trucks being able to actually be a viable alternative. Which I mean, they have some on the road, I guess. Well, they have the BEVs, right? So rants for other days. Um, he's had some good ones, and then he has the bad ones. Square Block, right? I'm not a big believer in that. Roblox, which I mean, you can bring that story in regards to child um, exposure to underage folks on a lot of these platforms, right? Um, so anyway, rants for other days, but he'll be missed. There's other folks I'm not a big fan of. Spruce Point Capital, right? Gosh, I remember back in the day, I'd be going at him when he didn't block me around Wix.com, and this when the stock's like $30, and that was one of my top 5 stocks a couple years ago, like 2015 or so. He said it was going down 80%. I mean, it's was it 260 right now? It's up hundreds of percent since then. He's had other companies that have been acquired. Ultimate Software, I think it was. He said it was going to $20. It was bought out for like 500. Rants for other days. All right, off my rant, onto stocks. All right, so now individual names here. So first, Adobe, and still setting up for the pincher here, gapped with the rest of the market yesterday, and sympathy with the market. Also had that upgrade from BNP. This morning, you have Oppenheimer reiterating their outperform rating on the stock. They reduced their price target, I think, to 550 from 600. I mean, it's the pinch is still in play here. So I think once it gets going, it's headed to 440 and beyond. I was able to lock some of my calls in to cover some costs yesterday for close to 100%. I'll continue to look for opportunities to close those out. And I might look for some more strikes, especially if there's strength today for a move to 440 or so in the coming week or two. That's Adobe. Similar, take a look at URI. I mean, this is what happens when you get a pinch. And obviously, some of this is news induced. They announced they were buying HE uh, uh, Industries. I forget what the name of the company is, but they announced that 2 days ago. That was some of the gap and then some continuation. But similarly, I think it heads north of 780. The 50-day moving average there on URI. So I might look to get some strikes there today. I was watching yesterday. Premiums are expensive on a risk reward basis. Maybe they come down a little bit today. And that brings me to Intuitive Surgical. So I was doing my rant Tuesday afternoon and was looking at the premiums on Intuitive Surgical, knowing they were going to announce their prelim numbers into the JP Morgan Healthcare Conference. They were presenting at 12 o'clock Eastern, 9 Pacific time on Wednesday. The 580s look interesting, but they were like $1, I think they were. So I didn't want to be in a spot. The premiums were kind of rich. And then sure enough, they announced their prelim numbers, which were great, nice upside. And then the stock gapped. It ran to 560 at the open and then gave it back. It was down to 550. Once it started to bounce, I said, wow, this is going to keep going. So I went and got those strikes. I was looking to get maybe 590s, 595s. And I'm like, if this runs, it's not going to matter if I get the 590s or the 595s or the 600s. They're all going to be nice multi-baggers, but the further out of the money strikes are going to be less risk and a higher reward. So I went and got the 600 strikes, waited to the afternoon, closed some out for 100%, and then towards the end of the day, I closed some more out at 400%. I'm watching today. I mean, 578 is probably the spot I would look to salvage. I wouldn't say salvage. I don't know what the premium is going to look like with 2 days left on the 600s if it gets to 578. But that might be a spot where I close them out depending on what they look like. On the flip side, I always say blue sky breakouts, new highs beget new highs. So maybe there's more price discovery up near 600. That's crazy as that sounds. So I'll be patient the first 15 minutes or so of trading. If it starts to find a bid after 15 minutes, I'll probably hold the rest for that move. And they report earnings next week, so I'm not going to add any more strikes on Intuitive Surgical, but such a great name, great story. And then it has that backdrop of the robotics, right? Everybody's hyping the robot plays. All right, that's Intuitive Surgical. TripAdvisor back to its multi-week highs yesterday. 1557 is the big spot. Still at my January strike, so I got to close them out. I was looking yesterday to close some, but then it downticked. I wasn't able to get a fill, so I'll continue to look for opportunities to close the last of my Januaries. I still have my Junes too, and once I close the Januaries, I might look for some other strikes as well. Not much to talk about here on Joby. Chopping around. I mean, all things considered, especially where it's come from November, it's actually healthy consolidation here. And then once it breaks 962, I'll look for some more strikes to play for upside. That's Joby. Other names. So United Healthcare announced earnings this morning, their first revenue miss in like 4 years. They reaffirmed their guidance. I mean, the stock's down here at 520, considering it was at 480 only three or 4 weeks ago, and on no catalyst outside of the possibility that there'll be some kind of disruption of the healthcare sector due to the tragic events. I have to think maybe this is going to be a bounce. So if it holds I put 517, 520. If it holds out this morning, I might look for a reversal today. I think it's like 3 of the past 4 weeks I've done UNH calls, so might try and do it again here today. We'll see. I'm not going to chase. I'm also don't want to catch a falling knife, so maybe it starts to revisit the low 500s. So I'll be kind of selective there, but I still think it's right. The 200-day moving average is right there, 537. So maybe it bounces back over that. That's what I'll be watching today. Similarly, still looking at CAT. So URI, similarly to URI, CAT. I think these plays are going to benefit from what's happened in California. Those are tragic events as well. Unfortunately, I trade, right? I mean, it's you hate to trade think bad things that happen to folks. Like you hate to see trade bankruptcies and things like that. But we're here to trade. I'm not here to debate whether the wrong or right or have I wouldn't say morals. I hate to see things like that happen. But at the same token, people are going to trade it. So I think CAT, you take a look, 50-day moving average right at 382. So I think that's a good spot. If that breaks, I think it heads to 400 in coming days. It also got got to maintain a buy today. Truist, I think they downgraded price target, and they just announced their earnings, which I'll have to see where that date is. So that could be a catalyst. And then Roku, was spiking when I was doing my rant yesterday afternoon, all the way up to 78.63. No news, no catalyst, and then gave back all those gains at the close. I'll have some calls to encompass earnings, which will be somewhere in the middle of February. Just possibly two reasons. Obviously, if there's a catalyst at M&A, or if it starts to rally, I get some premium build into earnings that can lock some in, cover costs. But my thoughts on Roku. And that's it, folks. Let's have a great day. I'll be back later. Rock and roll.